This is just a money management we are doing. In that money management, before we initiate the trade, we are knowing that how much we are going to lose if this plan fails and how much we are going to win if this plan is going to give us the success. So this is what most of you have presented the same thing in one or other way. Fine. So this is the thing we are going to have. So while doing a successful option strategy or while forming an option strategy, the most important fact is the trend identification. You have to identify the trend correctly, then only you can able to be successful in this option strategy. So risk neutral comes in the second. First, you have to identify the trend correctly. Second, you have to follow a risk neutral approach. Then besides these two arrangements, or after making these two best arrangement, also if the trade fails, then you have to take a loss. So trend identification you made, also you have done a risk management. In spite of both the things, the trade fails, then you have to take a loss and come out. So that impact losses, if you will be knowing beforehand, then it will be good. So that is the objective of your money management. So using this 1SD methods, how you can initiate a option strategy, that I am going to describe today. So I have devised the 1SD trend forecast. Using this, how you can make the good option strategy. 3 points I am catching up here. One is a range bound trend, and another is a trend confirmation given, and it is a medium volatile trend. And third, you got confirmation, you penetrated and achieved the maximum success in that trend. In that scenario also, what will be the strategy? So come to the first one, wherein if the price action failed to cross 0.382 retracement, we experience the trend change is happening in the opposite direction. So this is what it says in this particular method, 1SD or the Fibonacci method. 1SD is just giving you the price range. Fibonacci method says that if price action failed to cross 0.382 retracement, we may experience the trend change is happening in the opposite direction. Trend change may happen in the opposite direction. So this is one of the conclusion of the Fibonacci. So this is what happened today also. So today also, if you can see the Bank Nifty weekly levels, if you can look into this particular level, 0.382 is 15,506. You have lost below that, you have touched 15,480 in the next 1 second, then you have bounced back. So you have within 1 minute itself all these actions have ended. So the 506 break and 408 achievement, these things happened in a 1 minute sequence only. That also I am going to show you here. So this is a fact. Whatever is written in that particular article month before, I have written it and given to you. So this is what happened at 12 o'clock, 12:55 I suppose. So this is what happened. So you can see in this particular chart. So here what happened, 12:51 you have given a breakout and touched that 15,480 and also bounced back. So 12:51, not even 1 minute. So within 1 minute itself all these actions has started and ended also. So this is how the first concept says that if you have 0.382, you have crossed but failed. This action failed to cross this retracement, then trend change is happening in the opposite direction. So in this particular scenario, what is the strategy I am going to initiate? So it is also Another one factor you have to take into consideration, that must be a range bound market. So what is a range bound market? Does anyone has a scale, or can anyone give me one scale? What is a range? Whenever, as per the Fibonacci proportion, whenever the price move in a narrow band of 0.38 to retracement, we classify that things to be a range bound market. Whenever price was in a position to cross 0.618 retracement, then we can say that it is a trending market or it is a medium volatile market. If price successfully crosses your death zone, which is 0.786 retracement, and move forward, then it can be considered as a volatile market, or it has all forces to take you to the upper trajectory. So this is how you classify. So here 0.382 retracement has come and it has failed, and it has given you a sufficient indication also. It is, whenever such kind of scenario happens, it gives you sufficient indication. So here I will give you for the Bank Nifty 3 occasions. Here is a occasion, here is the second occasion, here is a third occasion. All three places you have tried, the price has tried to touch that 0.382 retracement and tried to penetrate that, but failed to achieve the 0.5 or move beyond that. So then, and each time it is touching that level, some buying force is emerging and it is going to take you to a upper territory. So this kind of scenario, whenever you are experiencing, it crossed 0.382 but failed to maintain in that. As soon as it crosses, not even 0.5 it has gone, not even 0.5 retracement level it has touched, so which is 456. Each time it crosses that 10-20 point below, once it goes and it bounces back. So this kind of scenario, whenever it emerges, so you can say that it is a, and it happens over a period of time. It doesn't happen in a spike. Nearly from 10 o'clock it has continued till 1 o'clock or 1:30. Similar kind of means such kind of situations, you can say that yes, it is under a range, it is not able to penetrate a range. Then there are two possibilities can happen. Either the trend change can happen here, or the consolidation will go on for few more periods. So in this particular situation, I have already, in this particular article, I have given a brief description what kind of strategy you should take. So I have, though option strategy is unlimited, you do not have a limit for the option strategy. So this option strategy has many number of strategies you can form, but I have listed out two things: net debit bear spread at the 0.236 downtrend starting point and 0.618 retracement of the downtrend price point. So this also net debit bear spread you can take in this. Net credit bull spread, net credit bull spread 0.6182 to 1.236 retracement also you can take. So this consolidation, whenever you have a view that this consolidation is going to come, then you can rely on this particular strategy: net debit bear spread, net credit bull spread. So what happens here, you have got a trend breakout, but you are not able to penetrate this trend breakout. So there is a trend change is expected. However, trend change has not happened. So trend change has not happened, just it is an expectation of yours. So this can give any directional move. So trend change is an expectation, but it has not given you a confirmed signal that yes, trend change happened and it is going to move. So for that reason only, net debit bear spread and net credit bull spread I am recommending. So you can say that in this particular scenario how to form. So net debit bear spread, let us talk about the net debit bear spread first. So net debit bear spread, that too also in the 0.236 and 0.618. So 0.236 comes to your 15,569. So I am just rounding up to 15,600. So for Bank Nifty, I have shown you that example: 15,600, 0.236 retracement. 0.618 comes to 15,405. So I am putting here 15,400. So this event or this situation of 0.382 breakout has happened at a time period, you can say it has happened around this time period of 12 o'clock 52 minutes. So let me see at 12:52 minutes what is the uh, values of this thing, 15,600 and 15,400. This is the put option I will be buying, and this is the put option I will be selling. So this is the strategy I am going to initiate for this trade, and it is saying that this is a net debit bear spread. I can say think of also net credit bull spread also. So that I will take in the next example. So even though if I am forming a net credit bull spread 0.618 and 1.236, this is the point I have to take. So if I am taking a net credit bull spread, how will be my strategy? So here net credit bull spread if I am taking, so in the 0.618 and 1.236 is coming to 16,200. So I can round it to 16,000 and 16,200. So I can think of 16,000 call option that to sell, and I can think of 16,200 call option to buy. Anticipation, it is a range bound market is not going to break. This is my anticipation. Whenever this scenario will change, my viewpoint also will change. Currently it has broken 0.382, not able to give me a proper breakout. As soon as it breaks that, it rebounds and it signals me one trend change may happen. So the direction of trend change is not known to me. It may be in the same direction, it may be in the opposite direction. Trend change is going to happen. This consolidation is going to break, but which direction I do not know. So for that, if I'll just take a view of this thing, 15,600. So 15,600 put option around 1252. So 1252. So around 1252. So here is the chart I can take. So here 15,600. So 326 rupees and 55 paisa. So 326 and 55 paisa it is trading. 325 and 66 paisa, 65 paisa, or it is trading. And 15,400 also I can see in the same order. 15,400. This put option also I can see at 1252 time. So approximately that 1252 time. So this is also 400, 231.65, 231.65, 231.65. So this is what I have taken. I bought this one, I sold this one. So my objective is once the trend change happens in the direction of the trend, this trend breakout has given, if the trend change is following me and happening in the direction of the trend, then I will be get benefited. So here if I'll just make a risk reward analysis, 325 I spent, 231 I got, so I am spending 94 rupees here, and 200 point is the difference between two strikes. So 94 is my maximum liability and 106 is my maximum reward. This is what I am going to get. So if Bank Nifty manages to touch this 15,400 level, then I will be booking the profit in this. If Bank Nifty moves beyond my expectation and if it is going to the means a trend change happen in the opposite direction, say 15,771 or 15,800 level, then I can book loss and come out. So this is what I have taken in this particular trade. This is one of the analysis. Second, and if this 0.382 retracement crossover happens and maintain in the closing basis, then maximum cases we can achieve this 0.618 and 0.786 retracements. If this is also one of the possibility. So once we have given a trend breakout and maintain there and close there, then we have the chances to touch that death zone level, and before that 0.618 also we can able to encounter. So this is a second scenario wherein I am saying that this is a trending market. In a trending market, what can be done? So there also I have listed few strategies. You can form any number of strategies in this particular situation. I have given few examples here. In this scenario, form a net delta positive above +1 or net delta negative -1 based on the trend breakout. So net delta +1, net delta -1 is recommended based on the trend breakout. Imagine this, see this same thing as a example. So around 245 you got a trend breakout 15,833, or nifty case I am talking about. Nifty it will be more accurate. So I'm not telling that though in the initial case of the bank nifty 0.382 retracement was hitting, it was finding out a tough things to penetrate, but I didn't say that you go against the trend. I told you still you go with the trend. In this case also I'm telling you to go with the trend. If this crossover happened, 0.382 retracement crossover happened, then we have an expectation of 0.618 and 0.786. 0.786 is coming to and 7681 level, and this is also 7660 level. So I can say that 7700 strike will be the most appropriate strike for me. 7700 strike, since it is giving a upward breakout, so I will be choosing the call option. So this is a upward trend breakout, so hence I have chosen the call option. Now I have to make it as a delta 1, net delta 1. So for that I need to see the delta 7700 call option. What is the delta here? So here delta is coming to 57.5775. So this is based on now that based on the current price, but it is not based on the price what it was trading at 1 o'clock 30 minutes. So 1 o'clock 30 minutes only this trend breakout has happened. Imagining this is the fact. So here if I can say, if I am doing forming a strategy in this order, I am selling a future at 7630, considering it is having a 0.5 delta at this thing. So I am buying 7700 call option, 4 lots. Considering that time it was a 0.5 delta, so 4 lots I am buying means I will be getting a delta of 2. I am selling a future to protect that 4 lots, and by this process I am negating 1, so my net delta standing at 1. Why I have taken 4? Considering 0.5 is the delta of each one, so 4 lots will contribute to a delta of 2. Future is having I am selling, so it will have a delta of -1. So net I will be having a delta of 1. So my objective is to make a delta 1. So that is why I am doing this thing. You can form any other strategy. Nothing wrong if you can form a strategy with any other options combination. So this is simplest way to have a multiple call and sell a future. By this process only we can form. So why you are saying that if you are so much confirmed that it is going to go up, then why you are selling a future? So this gives you a trend breakout, doesn't give you a guarantee that it will move up. You may ask me, if I am so much confirmed that it is going to go for a 0.786 retracement, then why I am selling a future? Trend breakout doesn't give you a guarantee that this you are going to achieve. It has all probability to reverse also. Same thing happened. You got a trend breakout in downside in Nifty, it reverses today. You got a trend breakout in the Bank Nifty, it reversed. So this one standard deviation said that whatever calculation you do, you have a 100% probability of reversal. So for that you have to hedge the position. So if I say this is the thing has happened, and based on this view I have taken this particular trade. So 7,000, I need 7,700 call options, 130 pricing. So if I'm taking that same way, 1 o'clock 30 minutes, what is the price of this 7,700 call option was quoting? So if I take that picture into account and give a correct projection, so around 1 o'clock 30 minutes, 1 o'clock 30 minutes, if I can say, it is quoting at 58.20. So it was quoting at 58 rupees and 20 paise, and you have sold at 7630. This is having 4 lots, and future you have sold 1 lot. This is what happened. So then what is the target we can say? So we have closed at 7695, sold at 7630. So we lost 65 points. So 65 points we have lost. 65 into 75, we lost 4,875 rupees in the future trade. So how much we have earned in the options? So how much we have earned in the options? So here my option has closed at 88. So if I can take in that proportion, so 88 minus 58.20 I have closed. So here, so this is the profit I got. So into 4 into 75. So you got 8,000. So this is the net profit you have realized. So you have realized a profit of 4,065. You have gone along with the trend, and if it has maintained above that particular level, you have initiated a strategy considering that you are going for a medium volatility band, and with this expectation, because the trend change happened from down to upward direction, it was a downtrend breakout, broke above that, crossed all hurdles, given you an uptrend level, and successfully it has crossed as 0.382 level. Then you are initiating this thing. That is a great move has come. So with this particular expectation, if you are initiating a net delta 1 strategy, then it is highly beneficial. So 0.786 you are expecting. If it moves above 0.786, you will be at a great profit, come out. Third, if 0.786 retracement achieved and price hold above that on closing basis, then this 0.888, 1.236, 0.618 target is a possibility. In this particular situation, what strategy to take, that also I have explained it here. I have given you, if this is the scenario happens, then you can form a ratio call spread, you can form a cross calendar bull spread, net debit calendar spread, any of these strategies you can form. You can also form this delta, net delta positive 1 or negative 1, which you have formed in the earlier case. This also you can form. So objective of these strategies is, I can conclude in this order, whenever you have a clear trend breakout and you are finding out that trend has enough strength to take you to the death zone level or beyond that, then form a net delta positive strategy or negative strategy in the direction of the trend. Whenever you are finding out a consolidation is in place and you are finding out that levels, after giving you a breakout also, achievement of specific levels is becoming too difficult, and for a prolonged period of time Nifty is, or the instrument is struggling to penetrate a specific level, that time you can form the strategy like your net credit or debit bull or bear spread. So based on your objective you can form this thing. So objective is, when the trend is very clear and trend has enough strength to penetrate specific level in the shortest duration of time, then you should go with a net delta slightly positive 1 point or negative 1 point whenever you are finding that trend breakout has given. However, it is struggling to give you a particular level and it is consolidating for a bigger part of your time. That time you can think of somewhat less or somewhat more conservative strategy, like wherein you have a net bull spread or bear spread. Nothing wrong in this kind of trend breakout. Means whenever the trends are very clear, also if you are forming a net credit or debit bull or bear spread also, this should be beneficial. But if you add some more values to the delta, your profitability will be more. Profitability will be more. So this is about, we'll be giving you a training module of 7 to 8 hours of training module to understand all those options concepts. You'll be getting the printed book and you'll be getting on means this software. And this is having a scanner like of things. It has a feature to save and compare. Today you form, tomorrow you compare. Here is a feature, you can form any strategy of your choice. Here is a feature, you can form any cross calendar, the cross calendar and calendar spreads, whatever I have told you. Similar kind of strategies also you can form. Suppose this cross calendar and calendar strategies whenever you are forming. So here that you have to load the data, and based on that it will suppose if I'm forming the nifty, so cross calendar, it means one this month he will be buying, next month he will be selling. So this is if this is cross calendar, uh, you can say a scanner type of thing. So it can scan and form different pairs. Out of that you can choose any of the best pair. Suppose if it is telling you that if you are May month 7,000 call option, you are 7,700 call you are buying, April you are April you are buying, May you are selling. So this much you are realizing, if the market moves in this band for 5 days, it goes to 7,900 or it forms to 7,300. So what will be your profit and loss levels at each and uh, every point it is showing you. Once it becomes deep in the money, your losses reduces. If it is moving in a very narrow band, then your losses are stagnated. However, similar different combination it gives. You are buying April 7,600, May you are selling 7,500. So this kind of things also, what means what result it can give. And here it is giving a different combination wherein you are buying May months one lot and April you are selling one lot. In that case also, what is the payoff it is showing you. So it has lot many features associated with this. So it comes with the training material and other things. So before I conclude the sessions, one more very important thing I just want to tell you here. So you people are, many of you are trading, but what is my common experience says here? How many of times you have introspected your trading mistake before you start your money management? These are the very three key aspect of your money management. Trading mistakes, whenever I talk about that time, how many times you have accepted, yes, I did a mistake and this is a mistake. And many traders, after losing 100% of the principal amount what they have employed in the trade, they often call me and they often say that 10% per month I need now. How far that logic is true? You have already lost the money. Wherein you have come to the market with an ambition to earn 10%, you have already lost it, lost the battle. Then after again you are harboring the same ambition. So if that will be the idea, you cannot do money management at all. Third, before you implement any strategy, many option strategy or any strategy for trend forecast, how many times you have experienced this method or practiced this method? So how many times you have practiced the way we are saying that 1SD works, 1SD gives this thing, from the past 30 weeks it is giving like this. So how many times you have experienced this thing? That is very important. You can say that this kind of the things what I have told, it is nothing new. It is very much in the means from November 2015. This same article is flagging in our website. So many of you would have gone through this article. Have you ever tried to form similar kind of strategies and experienced the same? So already 7 months have gone. Many of you would have come through this article in the very beginning part. So before you implement any strategy or do any kind of money management, this is your first and foremost duty is to test it for a couple of months. Market will be there. Market will never run away from us. It will always be there. Test those strategies. Test the sequence. He has written these facts. He has written these facts, number one, number two, number three. Whether it really works in the market or not. Whether if it works, whether the sentences or examples given here, whether how far it is valid. These are the things is your domain. Once you start testing in same way, the facts what is coming in front of your eyes, if you start testing those informations, start following this information for a couple of period of time, then your money management will become very strong. Without that, money management will never become strong. Just by products. So Smart Finance has different products. And the futures and options, what you are learning, we have a very good formulated course on the futures and options. And this future and option, this is the only one course which is available in the English and Hindi, both the formats. So you can opt this course with the option strategy software, or you can opt this course with pair trade software, or you can opt this course with one learning software. So this is a course, so this comes to you 3000 rupees. The software what we give in this, it cannot be used for the trading. It has not having that automated feature, but you can test this software and to learn, it can help you in learning. And this same course come with one pair trade software wherein your ambition is for the pair trade, which I am going to take tomorrow on that pair trade concept, so that pair trade concepts you can able to apply in this particular software, and it has option intraday and the option positioner. And this is the option strategy software. This comes with the same course. However, you got a very advanced option strategy software wherein you can able to form any kind of option strategy. Any kind of option strategy you can able to form. So based on your requirement, you can opt for this thing if you like one. And all these courses, if you are whatever we are having, all the stocks if you are going for, you are getting a very good discount here. So if you buy it separate, so option strategy cost you 10,500. With pair trade feature alone, it comes to 7,000. And the only option course with the learning software, it comes to 3,000. If you go with all type of our courses and other things, and you can get all courses at a discount price of 17,500. So this is about our product. Important. First, do not fix your profit objective. First, be a rational thinker. Whenever you are becoming a rational thinker, first thing you say that I will follow a valid trend forecast technique. Wherever the trend is giving me a breakout, I will enter. Once I enter, I should hedge my trade. If these principles you follow, then only you will become a successful trader in long run, or else not.